Hey, hello everyone. Good afternoon and welcome to the PivotBoss Premium Trading Room. Today we're going to be doing the monthly market outlook. I just wanted to do a quick sound check, make sure that you can hear my voice. Awesome. Hey, how's it going, Brent? Good to see you all. I always like to rewatch the previous monthly market outlooks just to see how they played out. And thank you. Thank you for joining, everyone. And I was checking it out a little earlier. I always like to see. I always say that the market is like a soap opera. Not that I watch them, but it's like a telenovela where you're constantly trying to figure out the storyline, and it's a constantly evolving storyline. And that's kind of like the market. It's constantly evolving storyline, and I really enjoy figuring out where the market's headed next. And we're so good about identifying some of these zones. It's incredible. It's incredible. And we'll be looking at some futures here today. We'll be checking out some stocks. I'll do some live prospecting. Usually I do some prospecting ahead of time and bring some candidates to you. But I'll do some live prospecting just so you see how the process looks, at least from my end. Everybody does it a little differently. This is kind of the process that I've put together here over the last 18 plus years. And it's always evolving even still. My process continues to evolve, and I think that's a sign of a good trader when you're continually evolving according to how the markets are trading now, right? You have your core foundational market concepts, those foundational market concepts we should all really know, and those don't really change. But from there, in terms of engaging the market and how that can constantly be changing, as the market does. So I enjoy that process. So let's go ahead and take a look at some of these. What I wanted to do is just look at some futures contracts first and talk about a little bit of what we're looking at here. For the most part, let's take a look here. So here's the ES. And the ES has basically gone sideways to up since our last monthly market outlook. Our last one was in April, and I believe it was April 3rd when we did it. And in this May monthly market outlook, it's May 1st. So we got our first, I like to do these on the first, after the first trading day of the new month. So this is the first trading day of the new month, and we're able to come in here and now have new monthly pivots. We have new energy, coming into the markets. And so that's going to give us some good idea of what's to come. I'm going to put the monthly pivots on here for a moment. And then I'm going to save this as well. So I'll have to keep doing it. All right. So here's where we left off last April. Basically what I mentioned was that it was this day right here, April 3rd. I mentioned the short-term idea was to watch 2350 for a move into 71 to 76.5. That happened 2 days later. But I said overall, we have higher lows and lower highs, and we're compressing. And I said typically speaking, the tendency is to continue to chop back and forth. And I said that's not really good for actively engaging that market. So while we had the short-term move into this zone, we also had the idea that we would likely see lots of chop. And why is that the case? It's the case because we had a significant uptrending market here since the elections. Major move up since the U.S. election here in November. Big rally up, and then we had a holding pattern here for a little while before we resumed the up move. After this blow off top, that set the top edge of the range, and after this bottom here at 2317.75, it set the lower edge. And after you do that, the tendency is to digest in that price distribution, or create a new price distribution when the market digests the recent rally. And so, again, this is what I mentioned right at the top here. A lot of analyzing these markets is about understanding your foundational market concepts, your foundational market principles. And one of the most basic principles is expansion leads to compression. Expansion leads to compression. Compression leads to expansion, right? We saw a push up, markup phase, reaccumulation. Markup phase, another area here where it's accumulating or perhaps distributing. right? Distribution if it ends up breaking to the downside. That's why 2300 is so important. And so we have seen that sideways move. But what I also mentioned, if price were to test down into the below 2317s, you know, between 2300 and 2317, it would be a phenomenal buy for a pushback toward the top. And it didn't quite get to that low. The low was 1775. It got to a low of about 23s. Actually, I guess 2323. So that was the low right there. The low, it says actually 2275. So that's the area right there, right? It was within 5 points of getting to that low, and then now you look up 2 weeks later and we put in a high into the 2390s, and then right now we're trying to hold above these 76 halves. So you can see that just from basic market structure, we were able to get a very good idea of what the ES was likely to do from a short-term perspective, here to here, from kind of a medium-term perspective, sideways, and then a longer-term perspective, which was if it gets into this zone, it's a buy back up. 1, 2, 3, they all worked. That's crazy. That's crazy how that plays out. But again, when you understand market structure, you can get a really good idea of what could happen. That doesn't mean it will. It's then up to us to judge whether what we believe is happening is actually happening. That's where we judge the order flow and the market structure and how it behaves. And in this case, so far, you know, I've mentioned time and time again, this has been a market over the last 5, 6 years at least, where we've been going straight up and every pullback has been a buy. And if we don't, you know, necessarily get a new high on the pullback, then we likely have formed a distribution and we go sideways for a while. So really, really good direction here out of the ES from the last market outlook. And now we're at a point in the chart where it's very important here because this is what I mentioned. And for those of you that are in our master's training, we did a big master's training week last week, Monday through Thursday. We did some great content. If you're not in master's, I can show you around and show you some of the stuff we did here toward the end. But one thing that I mentioned in master's here, let's see, let me bring this up. So one thing that I mentioned in Masters is that when you have a range like this, our goal is to fade the edges. That's where you have the edge. You avoid the middle. You avoid the middle chop and you fade edges. You fade edges. However, you also want to be directionally with the current overall trend, right? So the primary trend has been up. And so pullbacks are a much bigger buying opportunity. These pullbacks, a bigger buying opportunity. When price gets up to the upper end of the range, you have to be much more careful about selling up here. Because selling up here could eventually lead to a breakout, right? And that thing could turn loose. Down here, not super likely to break. We've been in a super bullish market. If price even tested this zone, I think it's going to be rejected very, very strongly. And again, we'd be going up. So I always say up here, you have to be super careful if you're selling counter trend. Now, if you're trending downward and then you form a range down here, then selling up here makes much, much more sense. And buying down here, you have to be careful. So again, it's based on the primary trend direction. And up here at the moment, we've seen a recent rally, and now we're holding. Our 2376 half continues to be a significant key level. Look at it. Look how it's traded around that level. For those of you that haven't been around our analysis for a while, that level comes from a key impulse move that occurred in August 2015. So if I scroll this thing all the way back out, this is August 2015 right here. See, it says August. That's August 2015. That's 16. This is 17. Well, that's 16. And then 17 starts here. So this is 2015. And we had a significant sell-off from that high down to that low. And that impulse move set the range for the 2 years of trading range activity we saw. And that's why we were very big about fading the edges here for moves here and across. And we were good about fading these edges for a move up and back across. So that 2376 half right there, that level, was a target we had back when I printed that range. I said, okay, now we have a range that we're going to fade, but eventually, once we break to the upside, this is the target. We reached that range on March 1st. And look what we did when we got there. We just kind of died. That's the 100% expansion from that range. And again, that shows kind of how just universal our approach is, because we're using impulse moves. These moves can be used at any time frame. And that level, after it was hit on March 1st, you saw a 300% of ADR day. It was 298% of average daily range over the last 10 sessions. And when you form that kind of bar at these highs, it is like, what I call it is like an exclamation point at the end of a sentence, right? It punctuates that high. And that's important because that becomes the high. It might not be the high forever, but it's the high for now. And we can trade off and against that high. And that's what's happened here. The same thing with any of these key levels, right? Once you get that, after this, we knew there could be a little bit of weakness. But because the overall trend, we want to be a buyer on dips. So we've seen this thing play out. The other key level that we have, and that's what chat just mentioned right now, was 2388.75. What a level. This is the level that I've been talking about for a while, since we pushed, when we finally started to gap up and move. I said the target up here is 2388.75, and then we would watch for signs of rejection. The target was hit here. We saw signs of rejection on this day. So then on Thursday and Friday, I mentioned bears are going to look to defend 2388.75s for a shot at doing this, right? Coming back to 50, basically 53s, and then perhaps closing the gap at around 48s. So far, that's been the key. Bears have been defending that edge, and it's been clean. I mean, that was the high of the day on Thursday, the high of the day on Friday. Today, price popped above it by a couple of handles and eventually faded back below off that area. But once it pushed above 2388.75 today, it double topped immediately, and from there it was done. It was no chance of staying above it, and it came right back to VWAP on the lower time frame basis. So this has been an important level, and again, that comes off of that high and this impulse low. It's an impulse move that we're looking for, and this has been the range that we've been using, 1775 to 8875. And it's about how the market reacts. It's not every high and low, it's the impulse move, and that's where 8875s come into play. But look here too, 76 half is also in play, right? And now you have two-sided trade. You have bulls that are defending here, you have bears defending here. You have enough energy now to influence the next key move. Will it be down? Will it be up? You know, it's hard to tell at this moment because it all depends on order flow at that time. We know who's positioned where. We know where the stops are, but it's still developing, and we need the order flow to tell us what's happening that day it happens. But at the moment, I would say that anybody that's long right now, if you're buying at these prices and price rejects these highs, those late bulls will start to jump ship, and their sell stops will trigger the next move down. So while I believe this thing has been quite bullish and it's hard to sell up here, I do believe that if there's any failure to hold 76 half, that will open the door to 53s, 48s, and perhaps as low as the 23s. Now, why the 23s? Well, at the moment, this is the high of the month, and this is the low of the month, right? It's just a one-day high-low so far. Based on average monthly range over the last 10 months, if this were to remain the high of the month, which not likely right now, but if it is, this is your average move down, or your 75% move down. And your average move down would take you into 2300 half. So based on average monthly range over the last 10 months, if this is the high of the month, this would be an average move if it were to drop down. Anything in this LVN would be a huge buying opportunity. But that move, I think the high odds target would be 23.23. I wouldn't quite shoot for this one as a seller. I'd shoot for the early one and then look to be a buyer down here. But right now, this likely isn't the high just yet, but we're just working. We're working. Now, say this thing were to push beyond 2400 and hold and find acceptance. Now we may be looking at expansion. And what I mentioned to our traders in the room is 24.24 quarter and 24.59.75 are the next two upside targets. So if and when price can finally establish acceptance above 2400, that's your next target, and that's your next target up. We'd be looking for that move, right? Maybe not all in one shot, but that would be the approach, is to look to play toward those targets. Now, one thing I did do in the room here, and I'm going to pop it up real quick here, instead of basing my high off the monthly high, I'm going to do it off options expiration cycle. And so it brings it up like this. And so using the option expiration cycle as the monthly boundary instead of the actual month allows me to use the recent rejection high, which is this one, and forecast downward from there. So based off that measurement, we're able to see that 23.26.5 is our primary target to the downside. So if, this is a big if because we're super bullish, I think it's going to need confirmation, but if price can't hold 23.76.5, when and should that happen, then we may be looking again 53s, fill of the gap, and then 23.26 by the end of the month. And should that occur, I still believe it's a big buy, big time buying opportunity, anything in here, just like we've seen before, right? So that's the idea right now. That's right. So basically, this is what I mentioned in the trading room this morning, is that this is not really a rejection high, but it is the first day of the month, and so you're using that high. And so we had a projection down to 23.23. But this is the actual rejection, right? And if you're forecasting a downward move from this rejection, what I showed in the room today, a little hack, is to change the boundary from monthly, just like you would from monthly to weekly or monthly to daily. You change the boundary to options expiration, and then it'll shift it to options expiration, and then you can use that high, right? It's not always the case, but that's it. If you're toward the beginning of a month and there's a significant rejection a few days before, you can use the options expiration there high on that boundary, and it'll give you a better target based off the rejection point and not so much the artificial high here. So that was just a little hack I did earlier to show our traders in the room. So that's the idea. You know, this is similar to what I say oftentimes, is that if you have a trading range up here, right, this is a trading range, if too many participants are short down here and they don't get paid, the stops come out. If too many participants get long up here and they don't get paid, the stops come out. We're still in a trading range, but we're in an uptrending market. So there's energy up here, and it's building. And so I would keep an eye on that 76.5. Now, the day that 76.5 breaks, or should it break, it's going to be significant. It's not going to be a little break like this. If it is, then it's probably not a break. But when it happens, it's probably going to be one of those days that just drives through that zone, perhaps test 65s or something by the end of the day, midpoints near the midpoint of the day, something like that. That point would then become an area for bears to redefend from below, and then you'd be driving. So that's what the visualization of the entry execution would look like. So those are some thoughts on the ES. Again, as I've always mentioned, I learned early on in my trading career to analyze the market above and below current price. So whichever way it goes, we have a great idea on how far and where price could go, right? So if we were to break up, we got 24.24 and 24.59.75. If we fail to hold 76.5, I'm gunning across the range, 53s, and then into 23.26. Let's take a look at ZB. ZB is one we looked at last month. This one was interesting because I had much more conviction on this one at the beginning of last month in terms of what it was likely to do or what it could do. And let's see, last month we were right here. This was the first trading day of the month, right here. And what I mentioned was the play is for price to rally into this zone here, into 154.07, and then look to return it back to 151.11. So that's what I mentioned last month. It's likely up into here, and then it's likely back. And I mentioned that I had changed my tune on being so bullish because the market had been rejected so many times off this zone, and clearly bears have been getting paid. So I was skeptical at the time as to whether we would find acceptance above 154.07. I said if it could, we could drive into 150, 160. But obviously it did not. Again, the primary idea was anytime you're coming to an edge, this is a decision point. If price cannot maintain acceptance outside that edge, those late buyers become trapped and this thing rotates back down. And again, I looked at 151.11 as a key level, midpoint of this range or thereabouts, and that's the likely target. We got very close today. So not bad in terms of the idea. Up, then down. Now, what does that mean moving forward? Now it's a little more difficult, in my opinion. I still think we may be headed lower, but anytime you're at the center of the range again, there's a tendency to chop and absorb. Now here's what I'd be looking for, because we haven't really made it across the range or made it back into composite VPOC, because if this is rejection, then this is acceptance, right? 149.24. It's been a big level for us. I would say that if there's any attempt to come into 123.51s and there's a failure, any rejection, or maybe a gap fill and a rejection here, that could be the opportunity to sell it into 149.24. So right now we have kind of an uptrending market. We've gotten a big pullback. If bulls try to pick it up here and then they start to fail at this level, those bulls right there start to jump ship. That failure will be defended by bears as well, as bears attempt to defend that zone, and then that could lead to a nice move into 149.24. Once that happens, any push perhaps into 149s could offer an opportunity to flip it right back up toward 153. So right now we're kind of in the range, but I think any failure to get above 153.21 opens the door to much more weakness here. Let's take a look at CL. This is crude oil. Crude oil has been very, very active here recently in terms of a swing basis, but it really hasn't had a whole lot of movement outside of range here recently. I mean, today was not a great day to trade crude. It just wasn't. Friday, we nailed the low on the button. So pre-market report Friday, I mentioned this was a great rejection. Great absorption signature could develop. And I said the first test of 48.80 is a buying opportunity. And that was the low Friday. Price dropped into 48.80 and bounced about 60, 70 ticks. But it came into that level after rejecting the previous highs. So anytime price rejects the previous highs in a downtrending market, that's a recipe for new lows. So while bulls defended 48.80, and I advocated that Friday, today I had a different tune pre-market. I said I would not test 48.80, buy it on a first test, and we'd watch it to see what happens. Maybe we see track below it, something like that. Instead, we watched it live, brought up the order flow, and we could see that there were large passive buyers there with limit orders on the visual dome. But in the footprint, we could also see that aggressive participants were certainly hitting the bid and eating through, sweeping those resting limits. And that was easily the case. We saw no reaction, no oomph. It just ate through it. And again, sometimes this is feel, and we saw it. We saw it in the market today. So in rejecting recent highs and pushing below that 48.80, this is what I mentioned. We may see a test of this low, and once we do that, then we may see more of a reaction. So this has been a very interesting market. Now, what we said last time in crude was, let's see, where's the first? The first is here. I said this is tough. This is a tough one, but the first idea is a move into 51.71 and then 53.40. That's the high odds move, with a shot to continue to the outer edge, perhaps 55.03. We reached both of those targets. Not only that, what I mentioned last time was this is the low on the first day of the month. Look for a failed new low, because in an uptrending market, that failed new low is a buy, and that is what's going to get us 51.71. We did that. Here's the rejection, and we got it. That was a great 2-day swing. And then from there, it was a continuation into the outer target, 53.40. Those were the two levels that we called out last April. We nailed them. And then we came out and said, hey, this thing is super narrow. This is the advanced ADR indicator, so it measures daily range or whatever user-defined number of days you want. In this case, I'm measuring 5-day range. Down here, you can see those pink dots or pink bars. Those magenta bars are indicative of price compression. The data set is compressed. It's below 65% of average range. When it's compressed like that, there's a tendency to see an increase in volatility, increase in price range, and a breakout. And from that, we saw that move materialize. Now, at the time, I did mention the first breakout could be false. So I said if it pushes down first, watch for signs of rejection, you may be able to swing it up. Likewise, if it were to come up here, swing it down. When we saw it live, there was no rejection. The footprint was showing a ton of aggressive buyers that just weren't getting paid, and we knew that this thing was coming right back to 51.71 and then 51.06 because it's based off of our key levels, and that's what happened, and it continued even further. I mean, this was a huge move. But again, if you look at this from this edge right here, where you have 1, 2, 3, 4, 5, 6 trading days, and it's so tightly compressed. When you see the expansion occur, look at that. 1, 2, 3, 4, 5 days. Now look at the range. And then over here, you can see it's quantified. Anytime it's blue in this manner, it's quantified. That range is completely outside of normal. It's greater than 125% of ADR for that calculated range. And from that, it tells you that things are super expanded now and to expect compression. And that's what you see here, compression. So using these tools right here helps us so tremendously because it quantifies what our eyes are seeing. And that's very, very important. Now, at the moment, it's not a great trading environment on an intraday basis just yet. And I think the failed range expansion to the upside is suggesting more downside. So failure to hold this 48.80, I think it still kind of eats a little bit lower. We may be able to test this edge at 47.10, which is the bottom of the key range. If that were to occur, this is about where it would make more sense to now bring it back up toward 49.76 and back toward 53.40. Now, one thing that's going to be very important this week is the FOMC meeting and the Fed funds interest rate decision. That's on Wednesday. It's going to give us another FOMC key level, which is going to be very important. It's basically one of these levels right here. That's the FOMC key level from March 15th. This is the FOMC key level from December 14th. And you can see how the market has traded those levels, chopping around this one, then pushing up to this one, and pushing out to that one, rejecting, coming back to it, and back to it, right? We're going to get another one of those in 2 days. And when we get that key level, it's going to give us a lot more information about what to expect. Because as I mentioned before, this is this is March 15th right here. And that's the creation of that level. When price pushes up away from it and rejects, it tends to come right back to it, right? And then when price pushes through it down here and rejects, it tends to come right through it. And then when price pushes through it here and rejects, it tends to come right back to it. And so those levels are very important. We get another one this week. That's why the price is chopping a little bit here. We also have the French election coming up. The final French election this weekend, so that's going to be something to look out for. We also have non-farm payroll on Friday, crude oil inventories Wednesday as well. So we're going to have a lot of important data points, and that could tell us why the market's kind of compressing a little bit while tech is just running off, right? So this one again, not super helpful in terms of a wider scale right now, just because we have a little bit of info to come out this week, but I think this thing is quietly pushing downward at the moment. And once we get to this edge, 46.69, 47.10, there could be an opportunity to fade it back up off that edge. So short-term down with the potential to see a rejection and a move back up. That would be my thoughts on crude. Let's take a look at the NQ. Here's a look at the NQ. Now, this one was very interesting here. What a move. I was super bullish the NQ. I went back and looked and I was like, wow, I was really bullish. Here's the first trading day of April. I mentioned the first pullback is a buying opportunity, and it pulled back for several days here, finally hit 53.5 and bounced, and it took this 53.95.75 bid. That's the FOMC level from March 15th. Took it bid. And what I mentioned in the room was, or in that monthly market outlook, is our next upside target is 56.0269. 56.02 was the next upside target. We hit that today. So that was very, very timely. So I said the first pullback offers an opportunity to buy it into 56.02. I was hoping we'd get a little bit lower. I kept saying if we get a little bit lower, that would be a home run. It didn't quite get into 53s or even 53.20s. Anywhere in that zone would have been a home run. And this was still a great home run. I mean, it was a great buy, and it went right to the target. Again, why did I choose 56.0275? Why did I choose that number? I chose that number because it was based off of the impulse move of the election, right? So the U.S. election impulse move was straight down, hit that low. It rallied straight up into this high, 48.80, and pulled back to the midpoint here, 47.19 quarter. So from that high right there, if you look at the 100% expansion to the upside, it's 52.01. And then if you continue to expand this thing, this is 100, it says 150 because it's measuring from the midpoint of the range. So basically it's 100. So this one right here is saying 275, so it's really the 225% expansion from this impulse range. That's why I chose it, because it was the next major extension to the upside. I have not redrawn any impulse moves for NQ because it's been so vertical. It has not offered any impulse moves to really speak of. There's a little impulse move here, but there's no impulse moves. It's basically buy every time it rotates lower, right? And this is where a tool like this one can be very useful. That's the PivotBoss oscillator. Now, those of you that are in my room know I don't really use a lot of oscillators and those types of things, but I create my own tools. PivotBoss oscillator is based off of pivot-based exponential moving averages, the measurements between and among them. And you can see right now, these are the moving averages here, pivot-based, and they're stacked and sloped. This is the trigger zone right there, and every rotation is a buying opportunity. The other thing, when you're in a very bullish trending market, it's very simple to just bring up the oscillator here, put on the paint bars, and then every time you see a red counter trend rotation, this is the opportunity to look for an opportunity to get in ahead of the next primary trend rotation, right? A market goes up, primary, counter trend, primary, counter trend, primary, counter trend, right? And so that's kind of what this is. This is primary, and this right here is a counter trend. Then that's a primary, and this is a little counter trend, primary, counter trend. Now this is going sideways, but once you get the expansion, there it is. So at times, this can be a very useful tool, and this thing has shown that from this day, straight on up once the color changed here. So this has been very bullish, and we continue to push up. Now, one thing about today is that the NQ left behind a range of 150% of ADR, which is a big expansion day. I didn't really foresee expansion. I was watching 5,600 as a key level because it was the previous month's high. I was watching to see if there was any signs of rejection. And 5,600 held at every turn this morning, especially after the open. And what I mentioned to the group was watch for this thing to continue trending up, at least to 56.27. And also for this midpoint of the day to be at or beyond these highs. At the time, the midpoint was here or wherever, and it just continued to quietly push up. And this, for those of you in the trading room, that's what I meant right there, right? It's what I call the 50% stop run day, and there it is, boom. The next day, this is where the buy limits are right now. So any pullback into that zone on a short-term basis offers an opportunity to buy 5,600 into the 25% expansion target, which is 56.60. That's the R25 on the PivotBoss pivots. So R25 is the 25% expansion of the previous range. Since these are monthly pivots, it's the previous month's range. The previous month's range takes you from here to here. That's the previous month's low. That's the previous month's high. So this is 25% expansion from that range using this range. Look how wide that range was. It was a super straight up market. The pivots are rather wide. So anytime you have a big trending move up, you have wide pivots here for the new month. When you hit R25, it can oftentimes be a significant first test selling opportunity. So the goal here, short term, this is very short term, is if there's a retest of 56, this is where bulls are going to want to defend and squeeze into 56.60, that R1, that R25. So that's going to give you about a good 60 handle move here. Once we get into that target, if there's signs of rejection at 56.60, it could be a counter trend move back down. Not just to this level, but perhaps into the pivot range here. And any pullback into that zone offers an opportunity to defend. So at the moment, we've pushed through recent market structure at 54.70. And all of this right here is now ill-traded, right? It's just been very quietly traded here over the last 5-6 days. Meanwhile, you have this bulk of the profile down below. In order to make this a D-shaped profile, developing profile analysis, you got to retrade back here and then retrade back there, right? And that's what kind of builds this out a little bit. So in my opinion here, I think we're going to try a little bit higher. And if there's any rejection, we got some big tech earnings that have come out, right? So we have lots of tech that's coming out, and that could influence things. I would say watch this level, look to defend and squeeze. If there's any rejection here, it could be a short-term rotation back down into this zone, and any rotation into 54.70 offers an opportunity to rebuy back up to retest that high. So those are my ideas there for the NQ. Short-term up, maybe perhaps if there's rejection here, maybe a short-term rotation back down. Any rotation here offers an opportunity to redefend. At the moment, this thing is still blazing to the upside. So unless you're experienced, I would not be selling the NQ. I would not be selling the NQ. The idea, the primary idea is every pullback is a buying opportunity until proven otherwise. And so far, we're continuing higher. But there would be a shot to watch for a rejection at 56.6175. So that's the level right there, 56.6175. All right, let's take a look at gold futures. And this will be the last contract, and then we can jump onto some stocks. With gold, this one here, kind of different right now. I think where we left off, let's see, 4.3 is this bar right there. So we left off in this range. And what I mentioned before was we've nailed gold. I mean, we've had some great moves. The last great move was here, where I said above 12.05 squeezes back up the range into 12.32, and then 12.63, we got that move. Once we got that move, gold held here at these highs. And so what I mentioned last month was watch to see if these late bulls get paid, because there's a lot of late bulls up here that got in long, and if they don't get paid, then below 12.40 returns this thing back down. If they do, then you're going to start to see this thing expand, right? And I was more of the opinion that watch for signs of rejection, because I think this might happen. And then we saw a major rejection on this day. I said, whoa, this is pretty nice. Now we want to watch 12.63 and see what happens. Or the midpoint, right in that zone. I said 63 to 65 that day. Well, that day, overnight, I mean, it pushed right through it. As we were in the trading room, we also saw this thing get really strong. And that's why I mentioned, all right, well, that trade's already negated. As soon as you roll through the midpoint of a rejection day, it's already done. It's 9 times out of 10 headed to a new high. And so we knew right away to shift our focus after that. But this one really it's been kind of back and forth, kind of iffy. It's had some major days that have just been ignored by the market. But 12.63 has been the line in the sand that has been very, very pure for us. It's been a major level. And I've advocated for bulls to defend it over the last week. And bulls have defended it. Today, I switched my tune. So this morning, pre-market, I said, we've already gotten a rejection above these highs first. And right now, we have bulls that have been defending that level, but they haven't gotten paid. And so I think now is the time to watch for a run of the downside sell stops. We'll become a seller and look to run the stops below 63s, because we might be looking at a move back to 1250, which is the new composite VPOC, followed by a move into the next key level below 1240. So that's the current idea right now, is that we're likely headed to 1250 and 1240. And once we get to 1240, there could be a great opportunity to buy. And again, I mentioned this in the trading room today that I'm not a huge technical person when it comes to some of these chart patterns. I mean, I know the chart patterns. I like to trade price. I like to trade the auction, right? I'm not trading a chart pattern usually. But this is, channels can be very, very clear patterns. And again, if price comes down to the bottom of this channel, it's not a perfect channel here, but if price comes down to this channel, bottom at around 1240, that could be the area to watch for a trap, very similar to here, right? And then look for a squeeze back up to retest the highs into 1300 and then perhaps beyond. So I think short term there's more weakness ahead. Look at the midpoint of the day today. It's right where the stops came out. It was a 50% stop run day as this thing dropped. Now, I think any rotation into 63 from below, watch it. Because if there's a rejection of 63s from below, that might be an entry point for a push into 1240. So that could be another 20 handles down. Once we get to 1240, I'd be cautious if you're short, because that might be an opportunity for bulls to load it up and try to squeeze it. Now on the way up though, I'm still of the thought that we go up there and catch that 1306 and 1330s. So if price does get a little rotation here that's defended by bulls, again 1240s thereabouts, it would be below the previous month's low. That could be a trap. It could be into the S25. We could offer a box trap. That could be a great opportunity to flip it perhaps into the above 1300s. So if gold bottoms, would odds be in favor that the ES may top at the same time? That's a great question there. I think with the ES, I think you would see similarities there, but I don't know if the ES has been quite strong. It's been holding at highs this entire time. In the face of the market rallying from 1200 to 1300, a 100 handle rally, the ES has not dropped in that time. It's gone flat. So I don't know if the correlation is there as much as it had been. Obviously, the correlation is there to some degree. But in my research, the correlation goes on and off. It goes from a straight 100, anti-correlated 100, and it could go quite a ways away to be correlated only 60% or 70 or 80 or whatever the case is. So even if this thing were to bounce, say for example 1240 does happen, and say we do grab somewhere into 1300s right up here, I think the effect on the ES may be that the ES perhaps drops into 2317, and then that would be a great buy, right? 2320, 2317, 2310, that LVN down there. So I think that's what the correlation may look like. So I don't think it'd be a complete sell-off just yet. Great question. All right, let's take a look at a few stocks here. Here's one from last time. This is General Dynamics. I really liked this one last time. What I mentioned last time here was 186 was the buy zone. And I said if price pulls back to 186, look to defend it, and then look to squeeze to 193. 193 is right here. It got that 93 and then rallied into about 197. So it really did well, and there was little to no adverse excursion, right? And a great way to play options on that would have been to buy in the money options on the way up. That would have been a great way to get in on that. You could have been just slightly out of the money if you really believed in it there, but I like to go in the money options. This thing did push higher and hit that zone. It got a high up here of 96.97, so 197 basically, and is rotating down a little bit. But again, our idea to defend 86s on the way up was really good, and now we're seeing price fail to hold above recent highs of 93. and that could lead to a counter trend move that, again, bulls would likely defend. So right now, this one may pull back, reversion to mean trade into about 189 to 190. This little HVN here. But overall, I think the trend is still up for this one. This is one I saw as we were just getting into the room. This is BSMX. It's a Mexican ADR, Grupo Financiero. And this one right here has been trending up. And what I liked about it, has great market structure, and you also see stacked and sloped moving averages, and you're seeing a rejection day. You're also seeing prior lows where the stops came out and then price rallied back up. So this has a really good look and feel to it. This support right here, very clear. You have this trigger zone that has been rejected. In this case, I know this is a cheaper stock here. We could be looking at a squeeze that takes us back toward 980 or perhaps even as high as 10s. And so, again, bringing up the monthly ADR. This is on weekly right now, so let me switch it to monthly. There we go. So bringing up the monthly ADR. Remember, if this low remains the low of the month, then how far can price go based on average? So if this is the low of the month, based on average monthly range over the last 10 months, this would be your average target. 10 evens. 10 evens based off the current low today. We don't know if today's going to be the low, right? But we have to forecast off of some pivot to give us an idea. 971 would be your primary target, though, because I don't trade to a 100%. Primarily, it's to the 970, that's your 75%, and then you trail or scale at additional targets. But this is the primary. So 971 is the high odds target right now. 10 is the average target. So what I say to our traders is, if you believe this is the strong low, based off that strong low, you're shooting for somewhere in this zone as a high probability target zone. 971 to 10. That's a pretty good target up there. So I'd be looking for signs that this thing rallies into that area. You do not want really price getting below 870 here, but any rotation right now, perhaps as low as 855s. This is the midpoint. That's the prior lows. 895s I meant. 890, 895, and somewhere in that zone offers an opportunity to bring this thing up. So that's one there to keep an eye on. We've been talking about, we've seen a lot about Amazon lately and Apple. I don't have a setup for this one at the moment, but I did want to talk about it just because we've nailed some targets. We had a 918.88 target. 918.88 target. And when did I give that target? I gave it back here. That was 2016. So 2016, we had that, sorry, that was not, it was February 2016. That's your impulse move down. Here's this point right here. And I said, okay, this is a nice range right here. If and when we do see a breakout, there are your targets, 807 and 918.88. We just reached those targets this recent month of April. And now we're just above it. Now, I'll be honest though, once we got right here and we were forming this little box, I said, uh-oh, if these bulls don't get paid, these are late bulls, if they don't get paid, we might see a push back here, and then that's a buyback up. And they did not. They rejected here and pushed higher. So these late bulls did get paid, and we saw a nice continuation. So when we were at this point, I was cautioning and looking for perhaps a move downward if they couldn't hold 690, but they did. They held it, and this thing continued higher. So we finally hit that 918.88 target. I mentioned before that the next target above, so this today in the trading room, I told our next two targets up are 974.49 and 1030.10. Right? I mean, that sounds incredible, but that's where it's at. And I think for Amazon, for Jeff Bezos to overcome as the wealthiest person in the world and overtake Bill Gates and Microsoft, if Microsoft were to stay stagnant and not go this way, it would take about 986 or so for Amazon, for Bezos to overcome. So I've been saying, hey, this thing's going to go here. It's a race. And so 974.5, 1030 is the next big one right there. How are you scanning for the impulse moves like this? There are ways to scan for an impulse move. Generally, I don't scan for them. I look for them. But I do scan using a certain ADR scan. So, for example, down here, I'll look for something that has a wide ADR, like this one. So I'll say, give me anything that has an ADR, a 5-day range that's 3 times greater than average, right? And that would bring up a scan like this one, where you have that drive, right? And that would be perhaps an impulse move. So I use a high ADR scan, and I'm looking for basically these blue bars. Now, that doesn't always give you a perfect impulse move. A lot of that comes from our analysis too. Like, for example, this is a great impulse move right there, and you can take that and you can forecast, and I bet you all of the great moves that you're seeing, all these nice moves are coming off of that range. So all of these impulse moves can be found in certain ways. You can do it a scan like the ADR scan, or oftentimes traders in the room will say, hey, check out this stock or check that stock out. Let's look at it higher time frame. And because we have traders in our room that don't just trade, we're not just day traders in here. Some of us are, and some of us are swing traders. Some are trading in their IRAs. Some are trading options. Some are trading futures. Some are trading options on futures. Some are trading Forex. We'll look at anything because our approach is universal. The way we look at the market and analyze it is universal because we're using true auction market theory. We're looking at true price in the market. We're looking at volume in the market. And when you're using those types of inputs to derive your information, you're going to get the cleanest levels. I don't like derivative information at all. This is about the only derivative information I'll do, which is my oscillator. Otherwise, I like right now data, and I like data that's forward looking. For example, this pivot right here, that white line, you know what it is before that white line is there because it's based off the previous month's high, right? This is the previous month's low. So these pivots are forward looking. It's not derivative information. And I love that because you can then use those levels to forecast off of. So this was one right here that I still believe there's much more upside ahead. Obviously, it's not at a point right now that I'd like to buy, but any rotation, perhaps back down to 900, offers an opportunity to squeeze toward 1030. That could be 130 handles to the upside. That would be kind of a low end 901 or shallow pullback. If it were deeper, 860 right here into this market structure would be the best opportunity, I think. If price were to drop here, that LVN provides a much better odds bounce off 860. So those are a couple of levels to watch if you like to play Amazon. We've seen others as well, like TEAM. We talked about this one over the last couple of months. We had it on our, that was March. So we said, hey, March, this looks good. And then here in April, it was just kind of coiling up, and I said, that looks like there's more upside. It's not as great as it had been, but it's there. And then, boom, it exploded. So I gave this one as a buy on March 1st, and here we are, May 1st, and it goes from a close, and basically closed 29s, and today it got to 34.75 on a close. Not bad, straight up. Again, it was based on market structure and behavior of this market. Pullbacks into the PIMAs, the trigger zone, with a rejection signature, all of that very, very nicely. So what I mentioned to our group today is anytime you see something like this, where it's trending up, it's likely going to continue in that manner until broken, until it's proven otherwise. So you got to stick with it. Just like something like Shopify. Shopify, I've been putting this one up in the room, it seems like every 2 to 3 weeks with a new buy opportunity. And this was the latest one here. This was the latest one here. Those were two of the latest ones because of the great pullback. Boom, 3 to 5 day move. Pullback here. Boom, this is about a 10-day move. We got another pullback that we talked about Thursday, and so far it's been a 2-day move up. We did have earnings that are coming out tomorrow, so I would be careful on this one. right? I am not. If you like to trade earnings, you're not going to get that info from me because I don't do that. So uh, I I've I've developed the habit of staying away from earnings plays in that way because of earlier. You build early scars from battle wounds from early in your career, and you learn what to do and learn what not to do. I'm much better if I'm not trying to guess what somebody's earnings are going to be, right? Instead, let it pass and then look to see what's happening in the chart and judge based off of that. But this thing has been trending way up. Say earnings are horrible and the thing gaps down to here, right? Well, now we're going to see a big change of direction, right? So earnings coming up tomorrow, so I'd be careful. I'm not advising a buy right now or a sell. I'm just merely marking price structure right now to show that this one has been a fantastic trender. We've had a lot of great opportunities to buy this one, and anytime you get into a stacked and sloped environment, pullbacks into the trigger zone offer great buys, but you got to be very careful here with earnings tomorrow. And that was brought up by one of our traders in the room that there was earnings, so it was good looking out. We've had some story stocks like S-Bucks. These have been some that's been incredible movement in this one. This was the recent rejection tail that played out, a very quiet move down. But then once the stops came out above the midpoint of that tail, look at the release of energy. Look at those sellers. All these sellers got short, and they provided the fuel that lifted this thing up. And then price tried to hold above the top of the key range, and so far failing on this news. So it's back below it. So this one's going to be important here to see, can they get back above 61, 62? Because if not, we're at the top of a larger range here. So if I back this thing out, look at this range, right? You have this range that basically says 52.5. Up here you got 62s, and that's about your 10-handle range. And we're getting close to the edge up here, and we may have already found it. So I think with this one, I'd be cautious if you're looking to defend it, because rejections in this area right here have led to rotations back toward 52, 53 on numerous occasions. So I'd be watching. If this thing cannot get above 61s, we could be looking at a move back to 56.88 and 53. So that's one to watch out for here pretty soon. Tesla's one that we've been watching as well. Tesla has been a runaway train. It's been incredible. Here's our key levels. You see that? I'll show you what I just did. Hide all drawings, right? I brought it up. This is what it looked like. Okay. And when you're trying to look at this chart, you're like, all right, well, what's what? What's this? What are the key levels? But when I right-click here and say, show me my drawings, immediately a roadmap appears. It's kind of from my book, Secrets of a Pivot Boss. I talk about how pivots can be a roadmap to the market, right? If you don't have a map and you're trying to drive around and you've never been to that area before, you have no clue where you're going, right? But a map gives you exactly what to look for. There's many ways to get where you want to go to. Just look on the map, right? Well, this is the roadmap. It's these key pivots. It's looking to see how the market's playing at those areas, right? And when you get expansion from these ranges, you see what happens. So we've been forecasting this thing to trade much higher. And we were looking at 332s as the next major target. And we're getting close to it now. The reason we're looking at 332s is because we have confluence at that area. Number one, this impulse move here, we got a breakout through the top of that impulse range. Here's your 50% target. There's your 100% target, 332, 332.70. And then from over here, you have this impulse move. That's 50%, and that's 333.40. So that's going to be a big target right there that if, once price hits it, there may be a counter trend coming. But any counter trend move, I think right down into 290 provides a steal of a buy. And I think this thing floats right on up. This has been a very strong stock. I don't know anything about fundamentals or anything about their balance sheet. I don't know anything about them not making money. I just know price is going up. And when it goes up, you look to defend rotations, and you follow the guidelines. You follow the guidelines of the pivots and these key prices. And right now, the upside target here has a little bit more upside, and then I would look for some sort of counter trend rotation. I wouldn't necessarily sell the counter trend rotation. I would look to defend a counter trend rotation. And if this thing were to rotate into 290, the next upside target that I have on the board, drum roll, 397.63. 397.63 is the next upside target on a long-term basis, right? This isn't just for the month. This is perhaps 2 to 3 months out, right? So we'll look to see how price responds here at around 330s. You know, any rotation into, say, 290, I think that would be a home run buy from 290 to 390. It could be significant. Again, based off of market structure, based off of these range extensions. So I wanted to talk about some of these bigger stocks that most folks look at. We've had some great calls off of these lately, and we have some solid key levels that have been paving the way toward, you know, finding those nice targets that we like to find. Here's NVIDIA. NVIDIA has a nice key range that is developed here from this low, 87.57, right into this high, 119.93. That's the midpoint. And right now, it's been trading neutral, which means it's been trading off the middle portion of that impulse range. Look at this right here. This is 25% below the midpoint. That's been support, right? And then up here in the upper 25%, that's kind of been where they've rotated lower. So right now, that's kind of the small little range that this thing is trading within. But anytime a market trades neutral within a nice key range like that, I believe that it is a super energy building pattern. So this right here just builds energy because it's trading neutral within this extreme, and this extreme is trading right in the middle, and it's building that energy. And eventually, boom, or boom, right? It releases that energy. I'm not a soothsayer. I don't know which way it's going, but everything's been pointing up. So again, because everything's been pointing up, I'd be more comfortable buying these pullbacks into LVNs or defending edges down here and looking to squeeze up, right? And to the upside, if this thing can push through 120, the upside targets are 136 and 152. So 119.93, right? If and when this thing is ready to break. And there's no indication that we're ready to break out now. We could certainly trade here for another month and not even sweat a thing, and then the expansion occurs, right? Once price is able to extend beyond 120, 136 and 152 become the high odds targets. If there's any attempt to hold above 120 and then all of a sudden it's sitting there for 2 or 3 days and not going, then that would be an opportunity to fade it. You know, something like this, where it gets up there and it sits there for 2 or 3 days and it just doesn't go. Yeah, those late bulls are going to get their stops run, right? So a couple of tactics here that you can look for at those edges. Here's Wynn. Wynn Resorts. Wynn has been a winner. I'm super grateful for all the traders in our trading room. I sent out a few tweets earlier today because I'm really grateful for all the folks in there. They're just great people. And I always said before that, you know, trading can be so tough. You know, we got to all pull for each other. We got to have a good positive mindset, positive mental aspect. We got to help each other out because anytime negativity comes into the trading equation, it's not useful for making money. People who make money aren't typically super negative, right? Good things flow to good people, and I've always believed that, and I've been very fortunate with that respect. And one thing I'm really fortunate for are traders in the room who bring ideas to the room as well, right? Hey, what do you think about this one? Hey, check this stock out. I think it's coming into this support. What do you think here or there, right? Wynn was one of those, right, where, hey, right, check this out. I think it might be breaking out. You know, it's on this day right here at 102.50. And the idea was, you know what? That looks awesome. And I think this is going to happen, right? And we forecasted a move to the 100%, which is 123, followed by the idea that 136 could be reached. But this was a long-term play. Again, this wasn't something that was going to be a week later or 2 weeks later. It was one that, hey, I think 2 or 3 months from now, it's going to be up there at about 136.5, and it's already gone more than half the way. Counter trend rotations can be a great buying opportunity for a continuation into that target. Look at the way it pushed beyond this pivot here, and when it came back, it was defended. Comes back into the trigger zone here, defended, right? It's been a very, very bullish market and win, and part of the reason why we were so bullish is the weekly chart. So if you go up to the weekly chart, it's market structure as well. And right here, you can see this is market structure here, price pushes up, develops new market structure here, and now price is pushing up. So what I mentioned in the room is, usually when you're developing new market structure up here, you may go half the way, then pull back, and then finish the move into new market structure and create that new market structure. So I still believe any pullback into 109.50 could still be a buy on a long-term basis. You may not want to see that if you're long right now. I don't even know if we get that much of a pullback, but even if we got as low as 109s, it's still an opportunity to get to that 136.50. Now, we also had the 160 target as the final. So if this thing remains bullish here, this is a very real target above 160. Beyond that, I would not really push the envelope, but those have been a couple of the ones we've been looking at, and this thing has continued higher nicely ever since. Yeah, let's take a look at BA. So here's Bank of America. This has been a very bullish stock. We had this one as a buy the day before the election in the U.S. So November 7th was the election. Oh, sorry. This is Boeing. You're right. For some reason, I read Bank of America. So this is Boeing, yes. This is defense also, and Boeing. So this one we've been bullish those as well. We knew that. That's why it's been so bullish. This one right here has hugged this line, and that's why we've had this one as well. And that's been great. Look at this here, stacked and sloped. Now in terms of the impulse move, you have this move down, and then it rips up to that high. Now, I'm usually pretty particular about it, but I don't want to be too rigid. But the idea is from this low to that high, a pullback to the midpoint solidifies that impulse range, and that would certainly be one. And so what I would call this one, if that's the case, I would call this a bullish neutral extreme. So it's in the upper distribution, not quite breaking out. It's trading the bullish extreme of this range. So let's go ahead and mark this one up. On a low here, we have 160.82. Let's try to squeeze it in a little bit better here. Let's see, 160.82. Not going to be perfect here, but there. Oops, that's the wrong tool. Right click and add a fib extension. This one. Then bring it up to the top. The high is 185.71, about there. And then there. So it did not quite hit the midpoint. And this is the exact same thing we were talking about today in the room, which is, does it have to? And I said no, but I'd like it to. And I said most of the time it will, but sometimes it gets so close and you can't say that this isn't an impulse move just because it didn't hit here. It is. This is clearly an impulse move. And this is definitely close enough for me. So this is definitely a big time key range here. And we're trading the upper distribution for the most part. If we were to see expansion, I mean, again, you could see 210.62 comes into play. And again, I wasn't perfect on those edges. You can go there and get it to the penny, but we're a couple of pennies here and there. This one, because you have the key range from here to here, this is the midpoint. We've traded in the upper half of that range, so we're building energy up here. Typically speaking, that will release to the upside. First target's 198.17. Pull back, buy into 210, something like that would be a standard approach to engaging this opportunity. But that's definitely one that's building up here. I like the energy it has. Keep in mind, just because this is a key range and we're trading up here doesn't mean it has to do that, right? If price were to push up here and get into 180 above 185s and all of a sudden it just can't, those bulls don't get paid, then you're going to see another rotation right back to 173, and then those bulls will come in and try again. So it's all about order flow at the time of what's happening, right? But I think overall, this offers an opportunity to squeeze. Before a breakout, if you wanted to engage ahead of a breakout, then this is the market structure to watch right here. It's 180. You also have a trigger zone in that zone, and it's also the midpoint of the previous month's range. So pulling back into that area, 180, could provide an opportunity to squeeze on a short-term basis into these upside targets right here. And then you can use your monthly target. So let's do this pivot low right here. So what I'm going to do is I'm going to put this on options expiration as the boundary instead of monthly. And then we're going to grab that little low real quick. So you see how the dot changes to this low from this one? Now this gives us our targets for the upside. So if this is the low, because this is the ideal bounce zone, 180, then ideally you would go into this zone up here. That's your highest odds target by the end of the month, 188.25 to 197.97. So that's your target. This is your average range target, 190.97 from this low would be an average range over the last 10 months. And this is your high odds 75% target at 188.25. So if you wanted a short-term swing off of this zone, that's going to be your monthly swing into that area with a shot to continue much, much higher, right? Because if you're going to push into that zone through this prior pivot high, then chances are you're going to squeeze much, much more overall. And that's where 198 really comes into play. Thank you for that one. That's a good one. All right, I think that pretty much does it here. We've gone about 45 minutes here. No, an hour and 15 minutes. And I don't want to hold you too long. If any of y'all wanted to take a look at Masters and what we did here recently, for those of you that want to stick around, we can check that out. For those of you that don't want to check that out, you can head out. But I know some of you wanted to check out behind the scenes of Masters, so I'm going to pop this up over here real quick. We were able to do some pretty cool training here recently. Let me pop this up. All right, take care, chat in Paris. Thanks for hanging out. Let's grab this thing. So we did some great Masters training here last week, and some of you wanted to just check out to see what it looked like. This is our PivotBoss Masters dashboard where all of our training is housed. PivotBoss Masters is where our best training is for our traders. Obviously, the trading room there's nothing like hands-on experience in the trading room, and our premium membership is just $99 a month, and you get access to training and content and tools for premium as well, in addition to access to the trading room. I mean, $99 a month for a trading room is ridiculous, and it's probably not going to stay that low forever. But it has been very, traders are very, very much like the room and the price point and what we offer in the room. But if you're looking for more in-depth training as well, this Masters it's hard to beat, in my opinion. And this is our Masters dashboard where we have our core training, which is theory, analysis, and execution. We have our proprietary training, which includes our PivotBoss bands, pivots, ADR method, and PIMA. So PIMA, for example, is the pivot-based EMAs, along with the PivotBoss oscillator. ADR is that ADR indicator that calculates average daily range, in addition to other tools like the targets. PivotBoss bands, which I didn't show, is our VWAP with standard deviation bands, and PivotBoss pivots are based off of previous high-low-close ranges with extensions, which we use every single one of these tools right now, except for the bands. We also have a chart gallery here that's 200 plus charts, and our bonus training as well, which are Swing Trade Pro. Our resource library has tools for these 4 platforms: InvestorRT, Thinkorswim, NinjaTrader, and OmniTrader. And if you scroll down here, You'll see at the bottom of the dashboard, we also have our core training. You can get to additional content from here. Prop training, you can get to it here. And our chart gallery, which is here. So it's separated out by a tag cloud. So for example, if you wanted to learn more about our ADR method, or if you wanted to learn more about auction market theory, you can click on this and it'll pop up a custom slideshow here. So I can come down here, here's the slideshow, I pop it up, and boom, you can click right on through, right? Bop, bop, bop. You come back down here, you click this, and it'll reload so that you can choose again. And it's a great way to come in here and learn more about these concepts, because I talk about concepts sometimes and some folks don't understand what I'm talking about. So I can refer them back over here and say, hey, if you don't know about kurtosis, come check that out. Click on kurtosis and see what it is, right? It's a fantastic, powerful approach. If you don't know about, program-driven trend days or something like that, then check it out over here. Or if you don't, whatever the case may be. So it's a great way to kind of learn what we got going on. Theory, analysis, and execution. Our theory is all about putting in those foundational market concepts that we all need to know, those core principles that every trader must know, from auction market theory to set the limits for what we're supposed to be doing. Now, auction market theory tells us how to participate in the auction as a trader, responsive or initiative, and how to buy and where to buy, what to do. That's what auction market theory tells us. If you don't know it, how do you know what to do, right? I didn't get progressively better until I really understood how to engage the market, how to engage the auction. That's very important. Core principles, these are the principles that every trader should know. Like I mentioned earlier, like for example, expansion leads to compression, compression leads to expansion, those types of things. We have mindset, becoming an elite trader, those types of concepts. And these lay the groundwork for everything else. You have to master this before you can do anything else. And then we talk about analysis here, where we have algo, program analysis, price-based analysis, volume profiling, pivot-based analysis, intraday analysis. All of this, very, very powerful content. You can click on, this here, and then it'll pop up the video, and then it also pops up the additional courses down below. You can play it right here. You can get over here and start going around. So all of that's there. Execution is over here. Execution, very, very powerful as well. One thing you'll notice about execution is that the trade management and risk management is taught first. You can't get into a trade before you know how to manage your risk, manage your trade. So we talk a lot about risk management, core trade management, professional trade management, advanced trade management. We have introduction to order flow analysis, the footprint. We talked this week about pinpointing precision entries, confirming entries with the footprint, and studying entry scenarios with playback. All of those were added recently, and we did those live. So a lot of great things. All of these look the same too. For example, if you were to come down here and click on confirming entries with the footprint, it'll pop up right here what we got going on. It'll show you exactly what we're looking for. And there's additional PDF training as well, where we have our charts as well. So if you go back to the dashboard and you come down here, this is where we have our PDF notes, so you can click on that. It pops up all the training for all of these in nice presentation form. Same thing for proprietary. So we've got a lot of great content here. This was the recent live sessions we did. And with the live sessions, again, I try to be member driven here, where the members say, hey, we want to focus on this, or we want to focus on that, or please provide this. And that's what we do. And a lot of feedback this time around was about pinpointing entries. How do you confirm entries with the footprint? Pinpointing these entries. How do you get in with little adverse excursion? And that's what we did here. We focused on these courses here, and it was really, really well received. And it was a ton of fun and a lot of great content. I got great feedback from there. But we try to do these live sessions at least a couple of times a year. Sometimes they're small, sometimes they're big. This 4-day event I would call small. Last year we did a 6-week training, which was just intensive and grueling, but it was incredible. 6 weeks, it's just incredible. And it was all free to those of you that were already members. So if you bought into Masters, say 4 years ago, then that 6-week training was free to you. Just like this training this past week was free to existing members. Because, I'm always about giving back. I'm always about paying forward. And, I know trading can be difficult enough. And so if you're hemorrhaging money and you're still trying to become consistently profitable, it can be difficult. So with Masters, it's a lifetime membership. You pay one time for the content, and then everything new that's added is just yours. It's there, right? Additionally, all of the proprietary tools and the training, everything new we add is just yours. So for example, our latest software platform we added was NinjaTrader. I released 4 new indicators for NinjaTrader with more coming, including scans. And so those of you that have used NinjaTrader have been very, very happy to receive those indicators. So always trying to improve what we have here, but we have a lot of great training here for anybody. And what I mentioned before is this training is universal, which means if you're a swing trader, you can use this training. You know, if you're a scalper, you can use this training. If you only trade long-term in your IRA or 401k, you can use this training, because I built the methodology by design to allow me to trade any market in any time frame, because I didn't want to be tied down to just trading a day trading approach, because I knew I wouldn't have the luxury of just sitting in front of my computer and day trading all day long. I got kids I want to spend time with. I got summer coming up with my kids, and I want to be able to swing. I want to be able to play longer term moves. I want to be able to engage intraday if the pace and tempo is right. And so I built this approach here so that anybody can use it in any time frame for any market. You trade Forex, you can use it. If you trade options, you can use it, because this is showing you direction and how to pinpoint those entries. I'm not going to show you how to trade options, but if you already know how to trade options, then this analysis will help you pinpoint those entries and exits and trade management, all that stuff. So a lot of great stuff here. Again, this is all lifetime. So if you buy in one time, then you're going to get it all, and you're going to continue to get all the great content that comes after it. Also, there's a 30-day money-back guarantee. No questions asked. You want it back, you get your money back. So if you're not happy, you get your money back. And again, I haven't had many of those cases ever, and it was mostly someone else on their end saying, you know what, it actually wasn't the right time, I'll try another time. But it's been few and far between. You come into Masters, you typically love it. So again, if you haven't checked it out, you can jump right in and gain access immediately. You can come over here to PivotBossMasters.com, read much more about it, and you can go down to the testimonials and check it out and see what others have said, and you can take a tour, which we just did right now. So a lot of great things here at the website. If you want to look like, for example, here's the PivotBoss bands in NinjaTrader. So these are composite bands on the daily time frame. Actually, these are 5,000, so it's a smaller time frame, but you also have composite bands like this one on the daily time frame. So these are daily time frame 1 year VWAP with 1 year standard deviation above, standard deviation below. This is nat gas. Every time it got outside of third standard deviation, it came right back to value. Outside of third standard deviation, back to value. Over and over again, right? It's just uncanny, the tools here. But that's what I was trying to do, was build these tools, automate them, and provide them to traders. And we did that. I think we did a great job of doing that when I was with Nirvana, and I've continued to do that here with PivotBoss and PivotBoss Masters. So a lot of great content and tools here for everybody. And if you haven't been in a trading room, here's a good video you can click. You can click that video. It'll pop it up, and it basically plays a day in the trading room, an hour, the first hour of the day here, where we follow the market, figure out what the market's likely going to do, and then start engaging the high odds opportunity. So a lot of great content here to check out, and give it a try if you haven't already. And thanks again for hanging out on this May monthly market outlook. All of you also always make me happy for enjoying and engaging this content with me. So thanks a lot for stopping by today. I'll get this thing recorded, and I'll get it sent out as soon as I can. So if you want to rewatch it or pass it along, that would be very much appreciated. So thanks everyone for hanging out. Oh, one question here. Are the daily bands available for Thinkorswim? Absolutely is. Yes, they are. If I go over here and I bring up something like, Here's the bands. So this is the intraday. Let's bring up something like crude, for example. These are the intraday bands, right? But if I wanted to go higher time frame bands, you click it right here, double click, and it'll pop up a day, week, or month back look back. So if I bring up the month, I don't have a composite that goes out for a year, but that's something that I'll build into it. But now if I change the time frame to a month here, you can see that it builds out the VWAP for the monthly basis and then provides third standard deviations based on month. So yes, they are available higher time frame, but they are also going to get the 1 year look back as well. So I want to continue to improve these bands, but yeah, definitely have the higher time frame monthly bands there as well. All right, everyone, thanks a lot for hanging out today. And if you haven't been in the trading room, it only costs $19.95 for a 2-week trial. You can find that at PivotBoss.com. And if you go to PivotBoss.com/trial offer, so here, this is PivotBoss Premium. You can click on that and it'll take you, I believe, to trial offer. There we go. PivotBoss.com. Oh, something happened there. Trial offer. Here's PivotBoss Premium, so you can pop on that right there. It'll take you to the trial offer page, which is this one, $19.95. After the first 2 weeks, it would be $99 per month to stay on in the trading room. Our trading room runs from 8 to 11 a.m. Central Time, so first 3 hours of the day, basically, from 8 to 11. And then we talk stocks, futures, we talk anything. We have on-demand training, including our 10-part executive training series. There's proprietary tools there as well. And if you're not happy, I'll refund the money again. But again, that rarely happens, if at all. So a great trading room with some great folks in there. It's not too crowded, which I like. You don't see me banging the drum about joining my trading room all the time because I like to keep it relatively manageable and small. I don't want 400 people in there yelling at each other. That's just not fun. I'd rather keep it modest. I'd rather keep it good people in there that we can lean on and learn from. And it's a great environment. So check it out. It's only $19.95 and for 2 weeks and $99 thereafter. All right, everyone. Thanks a lot for hanging out, and I will see you all tomorrow morning. And I'm going to get this recording sent out for everyone else. Take care, everyone. Have a fantastic rest of your day. I'll see you all soon.